Hey guys, this is Tim Melvin with the Tim Melvin Deep Value Report, the Banking on Profits newsletter, coming to you from down here in what, to be honest, is a quite chilly Central Florida. It's only been hitting the low to mid 60s as highs the past few days. And some mornings when I take the dog out for a little jaunt, it's in the low 40s. Dog loves it. I absolutely hate it. I have a little bit of video problems this evening, but we want to go ahead and get a video up. We'll get the lighting issues fixed sometime over the next couple days. We usually shoot these things in the daytime, and the natural daylight does a whole different lighting environment. So I guess I'm going to have to spend some bucks if I'm going to be shooting these things in the evening. Anyway, I did not get a video out last week. I'd make some fancy excuse. The truth is, simply forgot. It was real busy around here last week. So this will be our first video of 2016. So Happy New Year. I hope you guys all had a fantastic New Year's Eve and New Year's Day, laying around watching a lot of college football, hopefully with a little bit of a hangover to indicate you really had a good time the night before. I know we did a lot of reading on New Year's Day and just taking it really easy. It's been a bumpy couple weeks to close out 2015 and get 2016 started. Looking at the portfolios, the banks in the international portfolio are doing quite well right now, flirting right around the break-even mark. We already had our first bank takeover this year, with Cape Bank of New Jersey being taken over in the first week of the year, so we're pretty excited about that. The deep value portfolio and the income portfolio being dragged down by the high energy exposure to business development companies and mortgage rates in the case of the income portfolio. But we're cautiously pretty optimistic about both of those portfolios for 2016. We love the way they're positioned. The income portfolio has a 10% cash flow in the form of dividend income, and we really like the stocks that we have in the portfolio. So we think that those will both have solid 2016s. It's just going to be progress as usual for the banking portfolio. I expect to see the pace of merger activity pick up. We're seeing signs that that's true, even though traditionally the first quarter is a little slow as everybody waits for those year-end audited financials from both the buyer and the seller. So the pace should pick up. We should have another fantastic year in the Banking on Profits portfolio. You know, as we sit here, oil is still a huge part of the story as we go into 2016. Crude oil actually touched below $30 a barrel for a few minutes today. And if you listen to the pundits, some guys are real excited. They think oil is going to rebound. Opportunity of a lifetime is a phrase I've heard more than ever before in my lifetime in the past couple of months regarding oil prices. I tend to favor that camp a little bit, but I have to tell you, there's been a couple guys that I've listened to that I have a lot of respect for, and they paint such a horribly bearish portfolio that I just want to get a big old bottle of bourbon and build myself a tree fort and go up in there and hide out until oil prices actually show some signs of recovery. We do know that there is growing dissent inside of OPEC. Saudi and the Emirates, they're big fans of the strategy. They're committed to it. The rest of OPEC, not so much, because they're starting to lose money on the stuff that's coming out of the ground. The Saudis have a little bit more room to play, especially with some of their newer wells. So could be real interesting if we start to get more fractions inside OPEC pushing for a halt to the market share program and a continued excess production program that the Saudis have put in place to retain market share. Have no idea how it plays out. I do know that I like the companies that I have in the portfolio. I believe they can survive until they thrive again. I have identified and picked out my point based on oil prices where I'm going to double down on these stocks, and if and when we get there, I will in fact add to the positions in a substantial fashion. Very confident in the companies we have in the portfolio once again. So lots of talk today about the Baltic Dry Index. Hit an all-time low today, and lowest point since sometime back in the 1980s when they started keeping the index. Now, Zero Hedge was immediately out saying, it's a calamity. Commerce has collapsed. We've been overstated, folks. There's still stuff being bought and sold all over the world, just not as much of it as there was, back in the boom times. The global economic recovery is extraordinarily slow. I don't see it strengthening significantly anytime soon, no matter how much stimulus Europe continues to throw at it. They're throwing a lot, and we expect the Japanese to throw a lot more. China, of course, is putting the brakes on with their statements and, lowering their currency against the basket of international currencies. They're saying it won't go any lower, but I don't believe them, nor do I believe that they're going to an internal consumer society. think they're going to talk their currency and peg their currency lower because they still need to export to grow that economy. They know it. We know it. Everybody just wants to pretend it's not true. They are not yet. The middle class is not big enough or strong enough for them to become like the U.S., an internal consumer-driven society that just sells a bunch of stuff to itself. They still very much need to export. Don't think you'll see the yuan move a lot higher anytime soon. Could be wrong, but I think China will continue talking down both the markets and the economy well into 2016. That's going to weigh a little bit on markets too. Everybody's real concerned about China, even though directly they don't actually have that much of an impact on what's happening here in the United States, but the market cares about it, and that is ultimately what matters. Given all this, especially the Baltic Dry Index, stuff is being sold, not much of it. A lot of it's being discounted. A lot of it's selling at very low prices. So if you're kind of sitting back saying, we're going to have some type of huge earnings correction, upward correction that's going to drive stock prices higher, I don't think you have much of a leg to stand on at this particular point in time. I think earnings for at least the first quarter, probably the second, are going to be very weak. So I don't know how the market will react to all this. If the multiples will hold up, we'll sit back and see. It's no secret. I am hoping that we see a further collapse in stock prices. We have cash in the deep value portfolio. We have a list of very attractive long-term candidates that we'd love to be able to buy at much lower prices. I'm not sure what's going on in the kitchen down there, but it smells good, but it doesn't sound too good, does it? So anyway, looking at Europe, I have to say I'm concerned. I'm trying to leave politics out of this as much as possible, but the refugee situation is getting very serious, and not just because of growing radical attacks, growing crime problems as a result of the immigrant populations moving in, but it's becoming an economic problem. Most of these European economies simply cannot handle this flood of people needing housing, food, jobs, healthcare. They can't handle it. Germany can to a very large degree, but it's even going to start stressing their economy as they're just getting millions of folks pouring into the Eurozone, basically as refugees, bringing nothing, needing everything. That's going to continue to weigh on what is already a very weak European recovery. We're also seeing fences go back up on the borders. So as this continues, it's going to play into the Eurozone politics going forward too. Some nations want the refugees, some do not. It's a real mess. It's going to be a problem. It can move markets. We'll be watching that pretty closely as it develops. In the Middle East, it's the Middle East. It's the Middle East plus Russia now, so that's even more exciting. We're on the verge of a religious faction war. A couple wrong moves in either direction. You could have the seeds of something much, much bigger. I hope it doesn't happen, but you have to know that all the ingredients are there. I'm shocked that there is no geopolitical risk premium built into the price of oil, but in fact there is not, even though the risks are quite high. All we can do as investors is monitor the situation and be prepared to react to whatever the market does in response to any news coming out of the Mideast. So far, not much has happened. And the Iranians just captured 10 of our sailors in 2 boats today. They say they're going to give them back. They have not as of right this minute. Ordinarily, this would have caused a little market turmoil, particularly in oil. Nothing so far. The Saudi-Iranian conflicts of recent weeks, embassies being closed, diplomats being sent home, that would normally have roiled oil markets. So far, nothing. We'll see how it all plays out. We hope that somehow for the first time in 42 gazillion years, they actually find a path to peace in the Middle East. We wouldn't ever bet on it, but we can hope for it, right? So we'll keep an eye on that because that can play heavily into the picture for oil prices, energy stocks, and the broader stock market itself. The world is all heading off to Davos. All the rich folks and politicians, they're going to get together, solve all the world's problems, do a whole bunch of skiing, some eating, and I suspect a whole bunch of drinking. Now, I love Davos. I've never been. My invitation got lost in the mail again this year, unfortunately, but they sure do produce a lot of great stories, some fantastic talks and presentations with ideas about how to make money, what businesses and trends might impact society and the economy going forward. So we always pick up some ideas. So I will be writing and talking about that once Davos kicks off week after next. Now, at the end of the month, my invitation didn't get lost for this. I'm going out to the Acquire or Be Acquired conference put on by Bank Director in Phoenix, and I will be covering that for Benzinga.com. And of course, I will have commentary for my subscribers and everybody else on what's going on in the world of community bank merger and acquisition activity. As I said, we think the pace is going to pick up. I'm looking forward to talking to a bunch of the hedge fund guys, the bankers themselves, and everybody else around the industry about important trends in bank merger and acquisition activity in 2016. So we should have a lot to talk about, and should have some great articles on Benzinga.com as a result, which of course we will share here, and we'll have some exclusive content for subscribers as well. Now, it's the State of the Union tonight, and I don't think there's going to be anything market moving, but I can't remember the last time I missed a State of the Union address. Not going to be much to this one. I think this is going to be a victory lap, even though I don't actually see any political victories in a long, long time in this country, and that's not picking on this president, because I'll include the prior one as well. But as the drafts of the speech and the talk about it is going to be a little bit self-congratulatory in nature. And of course, we're going to hear a whole ton about guns and gun rights and why good guys with guns should give up their gun, and not trying to keep politics out of this, folks. But I think our problem in this country is not necessarily a gun problem. It's an illegal gun problem. And that's the one we should be focused on. We should kill off the war on drugs and go into the war on illegal guns, be a lot more productive and improve life for everybody, I think. But what do I know? I'm just a stock picker. So political season's going to get crazy down here. It's going to be for everybody over the next few months because it is the primaries, and we've got several more debates with 9 people on stage arguing and yelling at each other on the GOP side, and I'm not really sure what Bernie and Hillary are over there on the Democratic side. It's half love fest, half catfight. I am fascinated that Bernie Sanders is hanging in this race in New Hampshire and in Iowa. I never thought in my lifetime that a self-avowed socialist would be a serious challenger for the nomination of the Democratic or any other party. But in fact, he's nowhere near well as financed as Hillary, but he's doing very well. And the prominence of Mr. Sanders and Mr. Trump both say something about the vast amount of discontent in the American electorate. Let's hope that leads to huge voter turnout in 2016, and the American people can actually speak about what they want to see going on over there at 1600 Pennsylvania Avenue. Myself, I'm not filled with confidence by any of these folks, and I'm kind of hoping a savior rises from the ashes before we actually go to the polls in November. I'll probably be disappointed, but one can always hope. Okay, right now, geez, we're in the sports dead zone. The NFL has just bored me to tears this week. I watched the highlights most of the time. I have not watched a complete NFL game since the first or second week of the season, when just because of parity and salary caps, the quality of play was just horrible, and so was the officiating. Did very much enjoy the college national championship game last night between Alabama and Clemson. That was a great football game, lots of fun to watch. Great coaching moves on both sides, great athletic efforts by both teams. Lots of fun to watch, but it's over. So now I'm just kind of sitting here counting days until March the 2nd, when I've already got my tickets. Going to go over to Walt Disney World, Wide World of Sports, the ESPN Wide World of Sports. It's just right down the street. It's about a 10-minute drive away, where my Baltimore Orioles will be opening preseason against the Atlanta Braves. So hopefully we see a lot better pitching out of the Baltimore pitching staff, and we see Dylan Bundy with his arm in first-rate shape and able to take the mound. And maybe Kevin Gausman gets better than he was last year. We have the start of a good young pitching staff to go into 2016. A guy can always hope and dream, especially at this point during the hot stove part of the baseball season. So lots of books out this week. I downloaded a ton of books on Tuesday. It's publisher's release. I guess it's your winter catalog. It's pretty strong this year with some of my favorite authors. I'm only going to talk about one. Med Faber has done some fantastic books over the years on markets and stock picking and valuation, and he's come out with a new one. It is called Invest with the House, Hacking the Hedge Funds. I've just started it. It's pretty good. The premise makes sense. We do it a lot. We steal religiously from 13D and 13F filings, and he talks about some of that in the book. Even more interesting, if you've never read Med's books, he's got a sale going on several of his other books, including Global Value, Shareholder Yield, and Global Asset Allocation. They're all strong, solid reads, and they're deeply discounted for Amazon Kindle, I think until the end of the month. So you might want to check that out. Get the new book. I think it was $9 on the Kindle download, and the other ones are deeply discounted. So we'll check those out. They're all worthwhile reads. Anyway, that's all I've got going on down here. I've got to get some folks in here to help me fix this lighting issue happening. Hopefully we'll get that cleared up by next week. And hopefully it will warm up by next week, but the weather guy's telling me that I'm going to be wearing a lot more sweatshirts now. I've got my little Chicago Cubs shirt on that I picked up at Wrigley, and I ordered myself some new Baltimore Orioles sweatshirts today when I realized I had several more days of this sweatshirt stuff coming up. The only other one I've got going right now is my Grumpy sweatshirt, so I've got to get a couple more into the rotation until things warm up down here in Central Florida. Anyway, that's all I've got for you guys this week. I'll talk to you next week, and I hope you have a fantastic week in life and in markets. This is Tim Melvin of the Tim Melvin Deep Value Report and the Banking on Profits newsletter. Talk to you guys next week.